Okay, let's move on to the objective test questions on the financial management function. We choose 5 questions in the section in the question bank to explain to you on the key concepts of them. Financial management function objective test question 1. You are given 3 statements and you have to answer which statements are correct here. First statement. Maximizing market share is an example of financial objective. Is it true or not? False. It's false. So it's not correct. Why? Because maximizing market share is not directly increasing or maximizing shareholder wealth. In some case, market share is a cost to the company. For example, increasing market share, the company needs to spend a lot of marketing investment or marketing spending on pushing the market share to grow, for example, 1 percentage point. And it may not be sustainable. It has no long-term impact or long-term benefit to the company. Then it is not a shareholder wealth maximization activity. So it is not correct. It is because it is not a financial objective. Second statement, shareholder wealth maximization is the primary financial objective for a company listed on the stock exchange. Yes, it's true. A company listed in the stock exchange, they have different shareholders, and their common objective is they can enjoy the wealth maximization by holding the shares. So in other words, it is the primary financial objective for a company listed on the stock exchange. For the third statement, financial objectives should be quantitative so that the achievement can be measured. Yes, it's true. If it is qualitative, it is hard to measure, then financial objectives is not being considered because it is not measurable. Because we talk about whether financial objectives is measurable. All right. So among these 3 statements, number 2 and number 3 is correct. So the answer here is C. For question 3, which of the following statements concerning profit are correct? You are given 3 statements about profit. So number 1, accounting profit is not the same as economic profit. So you have to know what is economic profit. And you have to know what is economic profit or accounting profit. I think you all know that it is from the financial statements. For economic profit, it is the revenue minus your opportunity cost. Or sometimes may refer to your accounting profit minus any opportunity cost. One example is, for example, you quit your job to start your own business, and you have incurred the cost on your business with 50,000, and you make the revenue at say 75,000. So you make the accounting profit is 25,000. However, because you quit your job, and if you stay in your job, you can earn 30,000 at the same time. So in other words, the accounting profit is 25,000, but your economic profit here is minus 5,000 because the opportunity cost you've forgotten is 30,000. Even you receive 25,000 from your startup from the business startup. So they are not the same. So the statement is correct. Second statement, profit takes account of risk. Is it true? So here for ACCA F9 exam, risk is defined any business risk, financial risk, and for the profits, are they account for it? And how to measure the risk? Okay, and we know that the risk is the probability or is the variances of your profits, for example, and profits cannot take account of risk in here. So profits cannot take risk, cannot take account risk. It's not correct. The third statement, accounting profits can be manipulated by managers. Yes, it's correct. For accounting profits, it can be adjusted or manipulated by some ways, like you can change your accounting policy. You can defer your expenses incurred, time of expenses incurred maybe. So accounting profits can be easily manipulated by managers, but not the cash flow. So it is correct here. So 1 and 3 are correct. So the answer here is A. Question number 5. Which of the following statements are correct? First statement, share option scheme always reward good performance by manager. Is it correct? No, it's not correct. Because share option schemes, okay, not always reward good performance by managers. Good performance by managers, a lot of time reward by, for example, cash payments. So it's not correct. And the second, performance-related pay can encourage dysfunctional behavior. What does dysfunctional behavior means? Here, the key point is performance-related pay, the word paid. In other words, the bonus, for example, the bonus is performance-related. When we're talking about performance-related, how to measure the performance? Is your job performance. Like, for example, you can achieve your market share. Is for example, you're a marketing head, you achieve the market share target. If you're the sales head, you may have to chase or to meet your sales target. All these are performance-related pay, for example. And when we talk about dysfunctional behavior, it is saying that the behavior is not consistent with the company goal, with the goal of the financial objective. They're not consistent. In other words, the sales head would like to meet his sales target by paying a lot of rebates or discount so that they can achieve the sales target, but all those sales cannot make any profit, even making loss, then it is a dysfunctional behavior. So it is true. For number 3, value for money as an objective in not-for-profit organization requires the pursuit of economy, efficiency, and effectiveness. And it is correct because you have to remember 3E, which is economy, efficiency, and effectiveness are 3 key elements of value for money here. So the correct answer is number 2 and number 3 statement, which is C, is correct. Question 6. Which of the following actions is least likely to increase shareholder wealth? Now let's check. 4 actions. Let's check which one least likely to increase shareholder wealth. First, the WACC. Okay. Weighted average cost of capital for the discount rate. Okay, for the cost of capital, if it is decreased by a recent financing decision. If the cost of capital or WACC is decreased, okay, remember, because this cost of capital, what we talk about the investment appraisal for the discounting of the cash flow by the cost of capital, if the cost of capital is decreased, the NPV or the present value will be increased. Okay, so NPV increased, the shareholder wealth increased as well. For B, the financial rewards of directors are linked to increasing earnings per share. Okay, if it is linked to increasing earnings per share, then the directors would like to meet short-term gain or short-term profit target by sacrificing long-term gain. For example, they hold back a lot of long-term investment projects because for long-term investment projects, a lot of pre-operating expenses will be incurred, a lot of depreciation will be incurred, especially in the first few years of time, but a lot of value will be generated in the, for example, in the mid or in later part of the project life. So they don't want to invest. They just focus on a short-term profit target. If the objective is linked, or if their financial rewards are linked to the increasing earnings per share. So overall, the wealth or the value will be decreased because they just look at the short-term profit. C, the board of directors decide to invest in a project with a positive NPV. So it is very straightforward. The NPV is going up. E, the annual report declares full compliance with the corporate governance code. Okay, is it true to increase shareholder wealth or decrease shareholder wealth? Because of full compliance with the corporate governance code, in other words, the cost to ensure, or not to ensure, the cost to gain back, for example, gain back the investors' confidence is lower. Okay, once you comply all the governance code, it means that your risk level is decreased in terms, for example, in terms of internal control systems, in terms of any ethical issue, because you have to full compliance of it. Then in the long run, your company's value or your company's operations will be improved and your value will be improved as well. So the overall NPV should be increased. Okay, so from these 4 statements, the least likely to increase shareholder wealth is B. Question 7, 3 statements. Okay, which of the following statements concerning financial management are correct? So first statement saying that it is concerned with investment decisions, financing decisions, and dividend decision. Yes, it's true. We just mentioned about financing decision, investment decision, and dividend decisions are the core topics under financial management. Second, it is concerned with financial planning and financial control. For financial management, yes, it's correct, because when we do a lot of investment appraisal, it is the financial planning. We do a lot of risk management skills like hedging by forward, or hedging by money market hedge, or we talk about what is the transactional exposure. We talk about what is the interest rate risk. We talk about the yield curve. We talk about the interest rate changes to your financial statements. All of these, and also hedging instruments. All of these are the control activities that manage your financial state, manage your financial situations or conditions. So it is talking about financial control. So it's correct too. It considers the management of risk. Yes, it's true. We just mentioned about the risk management topic. So the answer here should be D, 1, 2, and 3.